Hi campers, welcome to the Flow Show. Here we are again, ready to go to war with markets. Morning, Mr. K-Man.
Good morning.
Good morning. How you doing?
How are we doing? And how is everybody doing? Our viewers, how are you guys doing? Are you staying alive in these markets?
Yes, good question. I hope so. They should be. If they're following this show long enough. Now we should be getting taken to the cleaners around here. Good stuff, Gavin. Good stuff. Right, let's crack on, shall we? Let's see what's going on today. According to some reports, a lot of goings on in China. The Parliament is set to approve issuance of some extra sovereign debt worth over 1 trillion yuan. Supposedly was coming today. I haven't heard any updates on that, so that's just a rumoured report. They're going to issue all this debt in November, and half of the proceeds apparently are going to be spent on water conservatory and flood prevention products or projects, I should say. So that's going to be another one of those things where they throw a lot of cash at something and it also creates some GDP activity too. Not too long ago, apparently President Xi made an unprecedented pop-in at the PBOC. According to reports, this is the first time since he became leader he's visited the PBOC. He also went and visited the mob at F.A.C.E, which is the FX oversight people. So the market's got a little bit speculative on what's happening there. He might just be going to see if they put up some new paintings, who knows? But speculation about what that trip is for, asking him maybe to do some more easing, we don't know. But anyway, that's hit the headlines as far as China is concerned. Over in Japan, this by-election is still causing a few waves in the political space over there. The loss of that one seat has got a few of his own party thinking that this won't be the time to call a snap election because the approval rating of the cabinet is pretty low. Calling a snap election is sort of a bit of a threat that Kishida has used previously to keep people in line, and it might not work if he actually has to do one now, so some of them say. There's also been some chatter about his idea of cutting income taxes, which according to one LDP MP from the Tokushima seat that they lost, said that voters saw it as an insult and suggested that direct cash handouts or money given to consumers would be the better way of doing it. So there's a little bit of indecision going on amongst his own party members there. According to Asahi TV, the government is considering this income tax cut of 40,000 yen with a proposal to provide 70,000 yen to tax-exempt households. Finance Minister Suzuki says no decisions have yet been made on the income tax cut, and it's all going to be discussed with the other ruling parties. Now, it should be said, as we talked about it yesterday, this possible what's going on with the LDP over there. As mentioned, it may not be such big news for the market if Kishida ends up getting replaced. If the party feels like they need to another leader that's going to shore up the party, what would likely happen is that not much of the policies will change. It's just another man doing the same job type thing. So although we bring this up and it is a bit of a situation in Japan at the moment, it's not necessarily hugely market moving or will be unless something really changes in the landscape there. But anyway, Kay, got any thoughts on all that? And Mr. Z going to the PBOC?
Mr. Z going to the PBOC is a good question, because I mean anything is possible, right? Has he warned them also that they are going to do more? Sorry, as you said, and ask them to do more to kickstart the economy. That is one possibility. Let's not forget that Xi is, since his mandate has been renewed and widened and put to life, is also, I think, well, him and his staff have also been named responsible for the country's finances, right? If I'm correct. So it could also be that he told them that they would do whatever is needed themselves to start the economy, but asked the PBOC to go and defend CNY as they are doing now, and just keeping it there. I was a little surprised reading that actually Chinese yuan didn't really strengthen more on the back of it, or at least showed some showed some resilience, and it's just following the dollar really. Yeah, so it's very much an open question of what he said, or what they decided, whatever. If he thinks that PBOC is not doing enough, I wouldn't even be surprised that the PBOC governor disappears at one point and be replaced by another one. Yeah, it's still it's an open question on that side really. On Kishida, he does well. I mean, that is clear from the start, but he does seem to be a bit of a weaker figure than Abe was, right? And even though there's a lot of similarities, there's a lot of in the stimulus and in the economic plans, but it doesn't have the same aura around him than Abe had. So the thing is, I have not yet dug deeper into who could be a replacement for him. I guess the old names will be coming back of the LDP leaders in that case, but I haven't looked at it closer yet. He has a bit of an issue now in calling snap elections because he doesn't have to fight his own party. He lost his by-election or this local election, as you already spoke about yesterday, and that is now making the LDP faction leaders a bit nervous. So I don't think there's an early election coming. So that's why he now tries to press the tax cuts and stuff buttons. If there would be handouts or tax cuts, remember over the pandemic, they all got, what is it, 110,000 yen or so. So if you talk about 40 to 70K tax cuts, that's not going to change a lot to the people's wallets. There is a bit of a sign of weakness, let's put it that way. But then the question is still, what's the other side going to do? Because overall, the LDP will still likely have the upper hand if we have elections now or even next year. You know, it's always who are you putting against it, and especially can the opposition get together behind one person, because that was also a big issue, as we've seen last time around. Not even to talk about when Abe was there, because then the Abe just really whistled through all the elections. There was no opposition then, but now perhaps the case could be evolving a little bit, but that's music for later, right? Right now, I think the main message here is that Kishida is really trying to push the boat on more stimulus and everything, and where that leaves us in the market is now we have this uncertainty between the Bank of Japan and the government. The takeaway next week, Bank of Japan's uncertainty, assuming that they don't make big changes also, or tweaking YCC, because that's something we are going to talk about again as well, I suppose. But all else equal, it's going to leave us with a government that is still spending a lot of money and likely not going to underpin the yen for very long.
Yeah, very much so, mate. Over at the BOJ, there's been a bit of a rehash of the Nikkei piece we spoke about yesterday about whether they're going to think about tweaking the YCC over what's happening in US yields, although that's eased somewhat today or yesterday, as we'll talk about. It apparently is going to watch yields until the last minute before making a decision. But this report from Bloomberg also says that they see little need to change their forward guidance on that front. So already, as we said, running into next week's Bank of Japan, we're ramping up the speculation comments on that front. Over in Australia, RBA's Bullock was out, sees risks on inflation and will not hesitate to raise rates. Pretty much an echo of the last policy statement over there. We've had
just on Bullock. Well, I'm going to say it first. I think she's comes over as being like, well, for sure, we've said a little bit more hawkish than low. But yeah. I'm starting to like her as a central bank governor. That's not your everyday comment that we make about central bank governors. But she seems to be fit for the job, don't you think?
Jury's out. Jury's out.
But she does seem to have arguments well sorted together. Of course, she was not a governor when the biggest mess hit the fan. Yeah. So we still, as you say, the jury is still out. But she does come over to me as somebody who is relatively capable on first sight.
Yes, well, we shall see. We learned our lesson from the RBA's calls a few years ago. I do think she is a bit more hawkish than low, or at least has taken up that baton a bit. But still trying to walk that fine line between we might do more or we might not type thing. But she's pretty much said that it's really going to be inflation, an uptick in the inflation outlook that's going to get them really looking towards another hike. So she sort of set the stage a bit for what the conditions are for another hike. So if the outlook changes, that puts it into their forecasts and whatnot. Then I'm just trying to find the line. Yeah, we will not hesitate to raise rates if there is a material upward revision to the inflation outlook. So that's the bar that's been set by them. So we have to keep an eye on their forecasts, as mentioned. So yeah, coming over to a bit of data. It's PMI day over there. Over everywhere. Kicking off in Australia. We had manufacturing coming in a bit softer, 58.0, services going into contraction, not looking good over there for the Aussies. So it's been a bit of a similar story all around the grounds, really. Japan, missing expectations, but not dropping lower than last month on manufacturing. Services pulling back a little bit as well. This BOJ core CPI measure coming in a little bit hotter. Was that flagged up? Or was this some out the number? I can't remember this one popping up.
Yeah, it always comes up the week after the
main number, doesn't it? Yeah, just sort of drop it in as they like. Anyway, there it is. 3.4% for the core CPI number, higher than expected. Japanese department store sales, it's not on this calendar for some reason, but I've got it anyway. Year on year for the national department sales was up 9.2%, so still a healthy number, a bit lower than last month's 11.8%. Tokyo store sales, department sales, 6.4% versus 10% prior. So still some good numbers coming in from that. Haven't even got, oh yeah, we did that one. So rest of the data we're looking at, the UK jobs numbers, this is the rest of the stuff that we should have got last week. There's a whole mess going on with this stuff. They're changing stuff, their measurements, they're not putting out adjusted stuff, unadjusted stuff. Long and short, I don't know what's going on. So just taking the numbers at face value, right to date, not potentially as bad as the market was expecting. Claimant count was up a bit, 20k. That's a bit of worry there. The 3-month rolling employment change was not as bad as expected, only down 82k, still a negative. But the unemployment rate dropped to 4.2%, so a positive there, if you can believe these numbers. As I said, I'm not sure what's going on with this lot at the moment. The ONS, well, I'll leave it there before I start ranting and raving about their uselessness. Onto the rest of the data and the PMI stuff over in France. Soggier manufacturing, but then we saw services ticking up. So manufacturing dropping to 42.6, really in a slump over there in France, in the Eurozone in general. Services up to 46.1, better than expected, but still in contraction. So it's just less crappy than it was last month. The Germans manufacturing back, services back into contraction, a little bit of an improvement in manufacturing. Again, all 40s numbers, so still heavily in contraction. The pan-Eurozone number as well, pretty much echoing that, less than expected, and a drop in manufacturing. Services dropping back as well. Over in the UK, a little bit, a minor dip in the services number, still in contraction though, and a bit of an improvement in manufacturing. All in all though, everyone is still pretty much in contraction, particularly in Europe. So that's not good news at all. That won't be good for economic activity. Later on today, we obviously get the US numbers, the S&P global numbers there. Manufacturing expected to soften a bit there as well, and services to move slightly into contraction as well. So might be a bit of a move going on in the dollar if we don't see that services number going into contraction, if it stays above the magic 50. Conversely, if it goes even worse than what's expected, could get some dollar weakness on top of what we've already been seeing in part. Right, well, we've had some moves in bond markets. Bill Ackman apparently got out his bond short yesterday, just sent out a tweet. We've covered our bond short, and that pretty much got the market money man, but it's hair on fire, and that big drop in yields from the 5% mark in US 10s. Going to mark it now probably as a significant top based on that move there. We're still in a bit of still not sure whether his tweet is worthy of all that, but it just might have shaken the market. That if one big punter has decided to get out, others may follow as well. Bill Gross, formerly of Janus Capital and wherever else he was at, he's been on the sidelines in terms of talking and squawking of late, but he's popped up a couple of times now. He came out saying that expects a recession in the fourth quarter, so he's buying SOFR futures to counter that, as well as some other stuff. So a couple of old, call them old big players in the market coming out with some comments, and the market moving on the back of it. I'm not altogether keen on following a lot of these people, but they do, as Kay mentioned, they do have a big following, and they have the potential to move markets. What do you make of it, Kay? All that and the move yesterday.
That's it. That's what I always say. If you, okay, we've got 2 or 3 different kind of traders, like us, I mean. But since I'm following a lot the fundamentals, and therefore I listen to a lot of those bigger players in the market. And whenever they say something, it's not the fact whether they are right or wrong. It's the fact of how much followers they have. Like, for instance, excuse me, if your BlackRock says that they start to find yields a bit rich, you can be dead sure that they have already been managing the position or already on beforehand. Same with Ackman. If Harry Hindsight now sees very clear, and that's likely why the dollar didn't really follow the latest bond yields, because those guys were already managing stuff, so likely. But it's always good to listen to those people, because they have such a big suite of followers that they are going to move the market in one or the other direction, and you can turn it around as you wish. You can call them out, you can tell them they're completely wrong, and perhaps tomorrow or the day after, or next week, who knows, US 10s are going to be 5.25%, who knows. But in the meantime, in between what happened from Friday, let's say, into yesterday, they really did move the market. Euro dollar is a percent higher, or at least went more than a percent higher. Cable went 1% higher. You just name it. And the US 10s went 15 to 20 VPs lower. I mean, just tell me if they don't have an impact. But you can't deny it, right? That those people. So it's always good to at least listen to what they say, not follow them. Listen or hear what they are saying. That is one of my points that I'm trying to make. If you look at the fundamentals, if your fundamentals are for higher yields, but if the big boys start to turn, they have their reasons, and it's not just machines or models. Perhaps their models have been telling them some stuff as well, but we have been very, very close to near an inversion of the curve as well. So those guys, they have the experience of trading those large markets, and you just have to hear what they are saying, listen to what they are saying without necessarily following them. I don't follow them, but I know that they saved me about 75 pips in the cable, because I was short and I bought them back at 121.5, and instead of having my stop dot above 122, you know, and they can help, or they can confirm. They can infirm positions, they can confirm positions, and you know, it's just a fact of hearing them. And again, whether they're right or wrong, whether you hate them or you like them, doesn't really matter. They move the markets when they take or get out of positions.
Yeah, and I think that's the thing. When they tell us something, they're already in it or out of it. You know, if Groves pops up saying he's interested in software futures, you can bet he's piled in before he's put that tweet out. So you know, you never take it as oh, he's tweeted, I must trade what he's done type thing.
No, that's a fact. But probably there's a lot of the herd who was like sitting in short bonds or so, and then they go like, oh, okay, he says this, so let's take some off the table ourselves. And that's where your probably your real move comes from. What we've seen yesterday, and that's where I'm saying, like, well, I mean, it's as I said, it's you don't have to follow them or like them or hate them. It's just that they, when they do stuff, the market listens.
Yeah, very much so. Right, just a couple of headlines before we do get stuck into prices. There was just under 7,000 auto workers in a stand-up strike at Stellantis in the US. More woe for the auto industry going on there. Strikes still going on. These UAW, United Auto Workers Union, still creating problems over there. So 6,800 walked out yesterday. China's Foreign Minister Wang is going to make a visit to Washington next week, October 26th to 28th, according to reports. There's been some, should we say, pleasantries exchanged between different state departments in China and the US over the last couple of days. So there's going to be another meeting. We'll have to see whether it leads to anything further. In the meantime, on one hand, they're having these pleasantries. On the other hand, they're playing with their little warships in the Mediterranean and all massing forces around there. So it's 6 of one, half a dozen the other. Now, I haven't heard anything different yet, but we had this rumor going around yesterday that Putin suffered a heart attack in his bedroom. I haven't seen anything that's dismissed that yet, but I haven't seen anything more that that's added to that. So I don't know if it was fake news. whether anything's been confirmed on that or not, but it is something we need to keep an eye on. If it's true and if there's a problem, it could change the whole dynamic going on in Russia, depending on who comes in. Oh, thanks, James. They dismissed it today. Yeah, thought as much. It sounded a bit like a rumour more than real news.
Yeah, it all comes from one source apparently.
Yeah, Telegram source of someone who's
someone in Poland also, no?
Yeah, contacts or something, and
yeah, and it all comes from there, and then everybody making stories around it.
Yeah.
But as James said, if the Kremlin dismissed it,
we shall see. Let's see when we next see him and what he looks like when we do see him. But anyway, these are things that are sent to test us. Right, let's get stuck in. So, we're all bond traders at the moment. So we have had a big move in yields. Some might say a bit of a long time coming. But the question is this just a pullback, or is this a definite top being put in place up here right now? I think where we have to monitor, we're down below these prior highs, give or take, was around support. You can call it 85, 90 maybe. We're back below that area. So looking at yields now, they're just starting on the bounces to run into trouble up against that old level. So that's going to be our marker now. If we get quickly back above there, then we're probably going to undo a lot of this down move. And then we wonder what's going on at the high up here. If we stay below, that could be the market saying enough's enough for this bond sell-off. We're going to be a bit more cautious from here. But the move's obviously spread around the grounds. As you can see there, a bit of red coming in some of the other bond markets there, bond yields there. It's been a bit of a strange move in the dollar, though, because the dollar's strengthened as bond yields have come down, which is sort of the opposite of what it was doing on the way up, but it's still not the same correlation as it should be. What do you think is going on, Kate? I mean, we've had a bit of pullback in euro, dollar, cable, Aussie dollars. That's looking a bit more buoyant. It's a bit of a washing machine again today, isn't it?
Yeah, you go from one side of the range and to the other side of the range, and then you stop. It's not a market, the dollar market. I mean, okay, there's other stuff in other currencies or crosses also going on, but it's very much like it looks like we are in a range still, right? We did get above that 106, 1025, 1010, and then the 35, 40, 50 raced through yesterday, and again we did a bit of an extension this morning, and then it all started to unravel on the European PMIs and US yields stabilizing. What do I make of all this?
Is it a bit of a case of the poor data in the Eurozone means it's good for the dollar? Because cables followed the same move and the PMI wasn't, was round about the same numbers.
You're running into techs there as well, up in the high 122s, close to 123 again on the cable. Yeah, it's just not different than what we have been saying for a while. I mean, it's 121, 123 cable, and whatever trades outside gets reversed. And now we have done. We've tried again below 121 a couple of times. Didn't work. Now we got back to the highs. There's a bit of a trend line coming in around 122.80, by the way. I can show that later. And that's exactly where it stopped. But then you see it stops at the same time as the US yields stopped, right? I really for sterling, I've been looking at those yield differentials, and actually they widened just a tad this morning again. So that's not very good for the cable either. But I really think we are in ranges. But my base ID is still the same. The dollar isn't dead yet. We do those kind of retracements, but nothing's really done on the dollar side of things, in my opinion.
Yeah.
We've held a pretty big level this morning on the dollar Swiss as well. Of course, that's going to be dragged around with risk too, but it's a pretty decent level down there around that 89 zone, 88, 90.
Yeah.
No, I really can't say more than we are trading ranges right now. The odd one out was likely what we saw at the end of last week and into yesterday, was with the yields going up, especially the 10-year pushing and the 30-year pushing higher, that the dollar didn't advance. And then that's probably why those bond things were already going on perhaps in the background. And then all of a sudden, when the yields are capped, especially in the US, because it's the biggest market, and they come back, the dollar gets a knock on the head. And that's basically what we've seen, right? I don't have any other explanation. And all the rest about this is it, this is recession, that's where, you know, really, I stopped at Ackman's tweet saying like we covered our shorts in bonds. Whatever they think about what's going on with the recession and this famous line that the data are actually weaker than what they show. I mean, what is that? I mean, I haven't got a clue what it means, to be honest. Why would the data be weaker than they actually show? No, that's just them thinking that something will go on. But as I said last week, it's a 1 year that we had the big recession call for 2023, and look where we are. I mean, as speaking about the US over there. So now we are ready to do the next big recession call for 2024. One day they will be right? I mean, there's always going to be a recession after solid growth. But are we there yet? I don't know. We don't know. So I in my opinion, yeah, as I said, two things. We are in ranges, and the other one is the dollar isn't dead. We made a correction, yes, for sure, but it's not dead yet.
Yeah, just a lot of short-term noise coming into this, and we got those GDP numbers, which, you know, for all the talk from your Grosses and Ackmans, it just makes that a bigger number now, because the market's going to be zeroed in, and I think it's going to be a spicy one. You know, there's a big expectation, 4.2%. Leaves a lot of room for a variation on that one.
But I mean, it leaves a lot of room for variation to the downside, because it's a pretty lofty expectation.
Yeah, exactly.
If that comes in weak, then you're going to see, then they're all going to be back. The recession callers, the pivot shouters, whatever it is, then it's going to be
cuts will be ramped up to Q1, Q2, 2024.
Oh yeah.
And
we're already back into
good volatility for us.
Yeah, we will already be back into negative rates. You will see.
Yeah, and all this bond rally will be a thing in the past. So, Ali, you asked a question earlier about the data. What's it going to do over the PMIs and whatnot? 103. What's your timeline for 103? It's certainly not going to happen today, mate. Of that, I'll eat my hat if it does. So I'm not sure what your call is on 103 on that one, but you know, we can't even get through 105 in euro dollar of everything that's gone on in that trend that we've seen. So I'm not sure that 103 is valid on today's data, at least. Still haven't even got up to 38.2 fib of that move. So it does keep this trend in play, as we've been talking about. It's had a little carve back, euro dollar, little carve back through some of the levels. There was a bit of minor traffic around this, these prior highs around here, 60s, 70s. Nothing you'd hang your hat on, but we're holding this level at the moment, which was the former break point when we got above 106. If we get under there, this is going to be very dodgy looking, and this 106, 10, 15, 106 big figure is going to be a bit of a line in the sand, I feel, if we get back under there. I'm just contemplating whether to have a little add back to my euro longs here. I did manage to chop some off first thing this morning when we got into the 80s. I don't know, I might have a little nibble. I'll keep an eye on that one. It seems like a lot of people are flapping about what's happening in dollar yen. Nothing's happening in dollar yen. Yeah, it's moved down 60 pips for 50 pips, whatever you want to call it, 70 pips. It's nothing's happening in dollar yen. Might this be the top? It might be, but until we get down under 148, I'm not interested. My big level's always been down at 147, and what happens at 150? All this in here is just noise for me. You know, yields have turned down by 20, 30 pips over the last day or so, and the most this can do is 60, 70 pips. You know, this is not a market that is functioning properly, I would say, right now. So it has been softer, and already we've bounced a bit. So, you know, you can play your knife catching games all you want in among here. Be my guest. Until it does something down at 147 or gets under 148, I'm still not interested in what it does, because it's completely off the path with everything else still. Euro sterling, that one unfortunately has tipped a lot of us out this morning. The break is looking like a bit of a failure now. Back under 86, 80s we're at the moment. So it's not looking too good for that one. We're back below the big figure, back below 86.90. Could be we're going back in a box. I think this one's probably a bit more, again, on the speed of how cable's moving versus euro dollar. Euro dollar going a bit more, and cable was going a bit more to the upside when both were moving up. So yeah, it might be a case that we're back to strumming our fingers on the desk in terms of waiting for this to properly break higher. So a few of us were long around the 87s. I was long 87.20 to the big figure. I'm out of that now. Just got me 85s on the books. I'll keep on those. But yeah, not looking too hot for that one. Kate, right. Do you want to have your little look around?
Yeah, just a couple today, yeah.
Yep. There we go.
Thank you. Usually, this is our jump in the euro dollar, which was caused by the reversal on the US yields. So yeah, but then again this morning, after the weaker eurozone PMIs, we went back to basically where we were, and now we are resting on that 106.35 again on the euro dollar, which is probably going to be where we start from in the differentials into this afternoon. PMIs in the US, but already, as Ryan said, and we spoke about that already, we really think that it's going to be about the GDP on Thursday. That's going to be the main one, I reckon. That's going to be the power have the power to create the direction and possibly a break of the latest ranges in the dollar. That is my feeling, because as Ryan said, we are expecting above 4%. It's a lofty expectations. Those expectations, by the way, have been constantly revised upwards. If you look at all the nowcasts, it's like 0.1, 0.2 higher every revision that they made, because I think they started around 2.5 and they're up above 4 now. So there is actually a lot of room for disappointment. Against that, if we are still around, let's say 490 here on the US 10s and 5% or above 5% on the 30s, for instance, and we really get that 4% print, then you have to compare it to what the Germans are expecting. For instance, they came out this morning and they are expecting a minus 0.4, right? So that's going to be a big divergence again, and I reckon there the dollar traders will really take notice. But that's for the day after tomorrow. So today we're expecting those PMIs. We're expecting just below 50 prints there, as I see on the services and the manufacturing. If they're just around there, I'm not expecting a huge move today. And then we probably will be starting to prepare the ECB and the GDP in the US. That for the euro. And here then a little, well, what should I say? Strange? I don't know, but it seems that gilts can't have their own life, because we had slightly better PMI prints, but again still sub-zero. But we have exactly the same move in the differentials than we just saw on the euro. This is your dollar move, and then this morning the differentials widened again. Yeah, it's a bit tough to really stick a rate on, but we were trading around 122.80 this morning, and now we're trading 122.40, and that's your move really. And I keep on banging on about those differentials, but if you look at your currency moves, it's really those are really near perfect overlays anyway. As I was saying yesterday, where has all that gone? I had my because I'm on a different time frame. I had this area marked here. We went above, shot through, and we stopped right on the 50% here of the move down from 109. This morning, there's also a longer term in there, which Ryan showed around 107. So there's your level. I guess that's your next level to watch. And now we are back on this level. This afternoon, 106.10 again, 106.10.20 again. If that starts to give way, then we are just going to continue to trade that range, right? Nothing much more to say, but again, as we've seen and we've talked about that on our shows here and in the chat room as well, we went, not especially in the euro because that held better thanks to the crosses, but we went to pretty critical levels in dollar pairs, and we saw that on the Aussie, we saw that on the Kiwi, we saw it in cable, and in dollar CAD, for instance, as well. Pretty critical levels to the one side. And what happens when those dollar yields are on the move? Then we move to, in between brackets, critical levels on the dollar pairs to the other side, and that was what we've seen on the euro, just close to 107, and what we see this morning on the cable as well. And look at this, 78.6 of the move. Bit of a trend line coming down here in the cable, and we stopped right there, and we are coming back down. So this is your zone here. Still reckon 123 will have a say because it just did in the past. But if it goes through this afternoon, there may be a bit of a bigger run here. That will likely come with lower US yields. Assuming that we have done the top now, then we are back trading the range, and the first support of the range is clearly around this 122.10.20. Okay, 122.10.20 on the cable to watch this afternoon. I'd say there is a bit of something going on this 10-year note, and we came close to the bottom end, but then this has put in this 10-year note futures has put in a bit of a double bottom now, just around 105.10, and this is when Mr. Ackman sent out his tweet in the market saying that he covered his short bonds, and we started to rally, but we're still very firmly in a downtrend channel. So we could start we could even correct more and more and more, but watch the top end of the channel for those who, if one day this breaks out, then there may be really something more going on the dollar side as well of things. Okay, so I'd say start to watch this one as well. Okay, very, very closely. This is one that I've stolen from Ben in our chat room. He came up with that yesterday, and I think it's really it's an interesting one. It's the dollar Swiss. We've seen this move. I've showed the euro Swiss. We've seen this move in the Swissy flight into safety over the Middle East situation, and then we have seen the dollar coming off, and then now this morning actually we came bang on the top end of the daily cloud, the 100-day moving average, the 50% of the move higher that we saw, earlier from July into late September. We're all there. It's all there. Okay, so just to let the people know that I've caught a little knife here, put on my butcher's glove, and caught a little knife here. You don't need to risk. For sure, I'm not going to risk a lot if we start to close below those 90, 85 level. I'll be out of it, but I think it's a worthy risk reward, because we also see that the market is trying to hang on to any straw that it can get for a little bit of positiveness out of the Middle East. And now that Israel has said that they may delay a bigger ground attack on the one until more hostages are released, and then also the fact that they repeatedly now said yesterday and this morning they apparently repeated it to Macron as well, that their only aim is to get rid of Hamas and not get into a bigger conflict. Of course, we all know they may not have the choice, because the Middle East is what the Middle East is. But the market, at least, is trying to clutch onto that little straw, and risk is doing a little bit better this morning. So I think that maybe at least, let's say, a retracement of this move could take us into closer to perhaps 90, the big figure, and or 89, 80, 90, the big figure. I'll be more than happy with taking a piece off if we ever get up to that zone. What else? There's one that is really troubling me. Is the Norwegian kroner. Can't find an ounce of a bid, and this is worrisome for the Norwegian kroner. I think, okay, we corrected just a little bit here, but we're still trading at very lofty levels there. I wouldn't be surprised if sooner or later, let's say, for instance, that the Middle East situation would quiet down a little bit, or we get like even or slightly less good numbers out of the US as well. For instance, oil could actually tank, and this Norwegian kroner lose even more. So I'm not yet ready to counter trade it. But I must say that I'm a little surprised about the really outright weakness of the Norwegian kroner. And yeah, that is about it. Short-term support, dollar yen. I know Ryan is looking at it wider, but short-term support is anywhere already 149, but we went a little bit lower there. Call it 149, 2030, 149 the figure, and then 148.70. So you've got like 2-3 levels there to look at if ever we get some weaker US data. And I really wonder where the resistance is. That's a big one, big question. No, I'm joking. 150, of course.
Don't tease us, mate.
Back over to you, Ryan.
Yeah, thank you very much, mate. Yeah, thank you very much, mate. Yeah, I've not got much to add to that. As I say, we got the PMI data from the US coming today. That's about the only hot topic, but things ramp up a bit more tomorrow. Aussie CPI overnight, so we get to see whether Michelle Bullock is going to be put to the test on a hawkish commentary thus far. I'm going to be on and off for the next few days, so you may not likely see me over the next couple of days, seeing as the school holidays, and I will be leaving you in the very capable hands of Mr. K-Man. So enjoy the rest of your day, the rest of your week. Have a good one, and we'll speak to you, okay, Will, tomorrow. Thank you very much, everyone.
Have a nice couple of days off, Ryan. Thanks, everybody. Talk to you tomorrow.
Cheers, mate. Thank you.